Every self-employed person today is worried about what the reporting procedure will look like from the 6th of April 2026. What will HMRC? How will the data be transferred and what requirements will there be for the self-employed regarding the storage and the preparation of documents? What will actually change? I will explain what the Making Tax Digital system is and exactly how it works in this video, so please do stay tuned. The most important questions will be covered right here. So, who will need to submit a digital tax return? Those who have income from self-employment or from property for the past 2024-2025 tax year of more than £50,000, but not profit, meaning what you have left over, but gross payment, that is to say, total receipts. You need to look at exactly how much income you've received in total. However, it is not that scary. You just need to prepare for it properly. If you see that last year your income already exceeded this specific limit, you should contact an accountant urgently in order to plan for the next tax year. What will you need to pay attention to? There will no longer be a general annual report where you can go in and adjust some figures or find additional expenses. If you did not include some expenses in the current quarter, you will need to make adjustments to the previously submitted tax report. And the main thing is not to be late with the deadlines, because the first deadline for submitting and preparing this report is the 7th of July 2026. That is when your deadline expires. And you are given 1 month for the preparation of a declaration regarding your income from self-employment or income from property. This report will only include information regarding your current income and your current expenses. But in order to include it there, you will need to make digital records of all your income and all your expenses. This is standard accounting, just like for businesses. You connect your banking channels directly to the software. You can choose any. For example, there is Xero, and there is QuickBooks and Free Agent, and also Sage. Various software now has the capability to submit these reports, so you can choose based on your budget and convenience whichever is best for you. You connect your banking channels, and throughout each month you keep records and make digital entries, especially when you have online trade and many different transactions. It'll be far too difficult for an accountant to do this just after the period ends before filing the returns. So naturally, I recommend ongoing bookkeeping services so that you can keep track of your figures every single month. What have they made simpler for the self-employed? They've kept the cash scheme. This means you can use the cash basis just like before and simply keep a basic record of your income and expenses through the bank. However, as before, you must keep your invoices and original documents that prove these income and expenditure figures. But you don't have to record them as a digital entry that confirms income to be included in your tax return and sent to HMRC. So what happens next? All of these digital records are gathered into one database to form the income and expenditure categories already approved by HMRC, which you can see via the link below the video. There's a breakdown of income and expenses there, showing how you'll need to group them for your quarterly submissions. Every single figure goes to HMRC, and if your inspector has any questions about them, they can put in a request through the software to access your full records, meaning they can see every transaction you've entered into the system. And then they can ask for the supporting original documents for you or your accountant to provide as proof of those transactions. For those who were already keeping good, disciplined records, there won't really be any major changes. The only thing is, you'll need to work a bit more with digital records and prepare for your reporting well in advance. Do you need to plan your taxes? Do you need to plan your income? Yes. The introduction of quarterly reporting actually allows you to plan for the tax you'll be paying by the end of the year, because many business owners used to file their returns in January and they'd be hit with a massive tax bill all at once. Now, though, you can see a clear plan of exactly how much you'll need to pay. But do you have to pay HMRC straight away when you submit these quarterly reports? No, you don't. It's just information for you and for HMRC as a preliminary tax projection. You don't have to pay anything on a quarterly basis. Tax payments will still be due based on your annual return, which you'll file as usual by the 31st of January as the following tax year. However, as I recommend to many of my clients, to avoid being caught out by a huge tax bill, it's better to pay in small amounts quarterly in advance. Because it's very easy to spend when the funds are in your account, but when it's time to pay them as taxes or pay back a debt, it's always very difficult, as if you're parting with your own. That's why this is also a positive for keeping such records. How are the thresholds planned to change? As early as next April, which is April in the year 2027, the threshold for eligibility will be lowered. So if your gross income has already exceeded £30,000 over the course of the past year, you'll need to switch to a quarterly scheme. This means that starting from that point, anyone whose income is above that amount will be required to report and pay on a quarterly basis rather than annually. Make sure you check your income records carefully to see if this change will apply to you. As a result, by 2029, it's planned to reduce this limit to £20,000. Whether the scheme works or not, this isn't new. If you were previously registered for VAT, if you filed VAT returns before, you'll practically be using the same scheme. So it's already familiar. It's been working in Britain for many years. It's just that today it's starting to work for the self-employed regarding income tax as well. So essentially, nothing changes. If you need more detailed consultations, write in the comments below the video. We always provide advice. Book a consultation, come to us for our services. We'll be happy to help you with your tax planning, your income planning, and to work together